And then we could easily say this is a demand zone and expect price to respect this one because of this liquidity. Or what do you think? Do you think Monday could open and price just goes up to mitigate this before dropping?
But I was looking to buy from this zone. This zone, yeah.
This one here.
No, this for our other block from this zone, yeah.
This one.
No, this low, this low.
This one.
This low, yeah. Yes.
For me, I would tell you this is, you agree this is an FU candle, right? Remember what I told you guys about the FU candle? You can check the library. There are videos on FU candle. And if you know about FU candle, this is already mitigated. You understand? This is already mitigated. From this point, you will see that the 50% is already hit. So if this is supposed to hold, price is not supposed to even come back this low. Do you get?
Oh,
The thing about
yes.
FU candle is that FU candle is the candle that clears that liquidity. Let me just put that out so you understand. It's the candle that clears that liquidity at the point of the swing area, then rejects immediately. So on the lower time frame, it's more like a QM, like this. Do you get? So we expect price to mitigate the 50% of that particular candle that clears out the liquidity, the one that did the stop point. So that's what we call the FU candle. And if you look at this, that's pretty much already mitigated. So if price should come down again, for me, I think it will just clear out everybody. Because all these are orders. There's people are already stacked in here. People are already stacked in here. People are already stacked in here. So is either is going to do this, but that would just be putting more people in profit, right? So why not just clear them all out? But still, we have people stacked in here because this is also swing highs, and these are equal highs as well. And then we also have a resistance level at this area. If you pay attention, you will see there's one resistance here that fought price from this point, also fought price from this point. You know, it took price a lot of time before it had to break through and did not stay up for long. It came back down below that area. So this is a very strong area. And looking at this could be used as liquidity because it's an internal high. You understand? It's an internal high. But this never broke structure either to the downside. So this is tricky. But Monday could open and price just shoots to the upside a little bit, mitigates this guy, and then come back down. And a lot of people would think that is like a break of structure and a new re-entry from this area. And then it clears everybody out, forming a new range, and then that becomes the break of structure. Do you understand?
Yes.
So what do you think about this scenario? This one and waiting for price to mitigate this point to do this, and expecting price to do this. Which one do you think is likely to play out better?
I think the demand zone of
The supply zone.
because it has liquidity, yes. The supply zone.
There's no liquidity here, just liquidity, like liquidity for liquidity. There's no liquidity for entry, just liquidity. So, you know what? This is a good point now for us to say we can pose this one and ask people. I can draw 2 points and ask people to give their opinion. Then I will use, their opinion to determine if I will trade this Monday or not. So I will just call this point A. Dash stuff. Okay. A. And this is I'm thinking of doing this. Let's just highlight, the resistance level for those who would say it's bullish, because everybody's just giving their opinion, basically. Even ours is just an opinion. So it's not like we're controlling the market or anything. We can't tell the market where to go, but we can obviously say it's an opinion. So yeah, let's just say our opinion is the bullish side. And then let me turn the inside red. Then we'll have this one. That's point B. So which, let me make this one green. Yep, simple. So which do you think would hold? This one or this one? No need to draw it. I think they get the idea. Let's go to a different pair. GBPUSD. This one is already playing out from a previous analysis. And I think it's bullish. Not even I think, it's very, very bullish. Looks very, very bullish. Because if you look at this now, this is like the internal structure price used to mitigate this, but never broke it. Mitigated here, and then break structure. So it's likely going to do something like this, because this was an accumulated high from the daily already. So basically, if you look at this, it's bullish. Following the trend is bullish. Let me leave this one and go to a different chart. See? Let me see the 2-hour time frame, okay? So this is what I see. Since my prediction is bullish, I'm looking for bullish points of interest. And I'm picking this order block because we have an inducement above it. Yep. And we have a break of structure here. From the higher time frame being bullish, and every possibility looking bullish with this fair value gap waiting to be filled, you know, at this point, you see all these are just gap that needs to be filled. Looking at that and having this order flow from this point here, I would say we are very, very bullish. There's no reason to even look to sell yet. Just price to clear this point. So let me draw the structure so you can see what I mean. This is the internal structure, internal bullish structure heading out. And then this is like a different structure as well. This one to this one. But there's no need to highlight that one because it's already broken. And we can say this one because this is a daily high. And we have this one, a daily low. We also have you see? So for now we are bullish. And we have this as an obstacle. I've been doing this for a very long time. I'm so used to it now. I just move so fast. Why? I know what to look for. Immediately I'm looking at it. So let's just leave that out of the picture yet. Let's pay attention to this one. We get the bigger picture. For now, it's bullish. And there's a stop hunt here. Okay, mitigation here, you can see. For some reason, I'm still not convinced. What if for liquidity? What if this is liquidity? And then all this would be built as liquidity because this is a trend line. Many looking at that, it's too obvious. What's it building? Why is it building this? Why is it doing this?
Yeah, that's trend line liquidity.
You know, if it's doing this, it's creating this for a reason. But at the same time, there's a fair value gap here, and there's inducement here, and basically it's still bullish. So we could just have this as a point of interest, and then have this in mind as trend line. Oh shit, wrong one. Trend line liquidity. Okay, let me just take this out. Yeah. Makes more sense, Abby.
Yes, yes.
I see the number is increasing. Anybody who has any opinion is free to drop your opinion. In case you have any opinion, maybe from what I'm doing, there's something that is complex to you, you don't really understand what I'm doing. Because I've spent a lot of time teaching you guys. We have spent like months doing more explanation and explanation. I'm sure you should understand what I'm doing basically just by watching me do it. So today I decided to start showing you guys on chat instead of doing more of explanation. So you could use this as guidance while trading within the week. And then the next mentorship will be coming up by ending March. And you'll get free access actually. So it's nothing for you to be alarmed about. Just prepare yourself if you don't know what I'm doing. From now henceforth, if you don't understand what I'm doing, just prepare yourself the coming mentorship you should learn. But basically, you're supposed to understand because you've been here for a very long time. I know I made sure I stopped mentorship for a while so I could use time to teach you guys what I'm doing. So I have evidence of time to say, yes, I have spent my time educating you all on how this actually works. So when the next set of students comes in, I'm expecting majority of you to know how most of these things works and you have ideas of how to draw your charts. So yeah, let's take this out so that we don't confuse anybody. Okay, right? So we are our general ideal is bullish. Hopefully we're not wrong. And we're expecting it to ride up to this point. Okay. And then at the same time, if we do get a break of structure, we're not surprised because we find liquidity here. So we could expect a break of structure to the downside, and then maybe something like this, turning this into a flip zone. So for those of you who understand how flip zone work, you can easily pay attention to this point of interest. And then wait for a reaction. Okay, so this is Monday. We have Monday coming up. You don't have to rush anything. You can wait and observe so you learn more and then have enough reasons to place a trade from any point of interest. Okay, let's go to different pair. Any questions before I head out? Anybody has any question on this one? Any question?
No question. No question.
Okay, thank you. On to the next. Okay, so I had this one. But fortunately, I had a stop hunt. I'm not sure I posted this. But you know, it's UAUD. This is one of the most manipulative pairs when it comes to dirty price action. So I'm not surprised. Most of the times when I draw a point of interest, I don't actually even trade from it. I actually wait for an extra entry. There are pairs I don't even wait for extra confirmations like GBPUSD and EURUSD. But pairs like this, I always wait. Never take a point of interest off a swing point without a reaction, especially from this pair, because it won't warn you before it breaks structure one. Because some pairs do, like EURUSD would give you some weak reactions, like something like this, before it breaks. But you see this guy, if he wants to break, like you see this one here, it's actually when he gives snipe reactions. At first, it snipes, then it starts retesting and retesting before it goes down. But you see, when it does something like this, it stops people out, stops people out, stops people out before it gives the first reaction, stop them out again before it goes that direction. It returns back to stop them out while testing this one. Remember, there was a break of structure here. You know, look at this. So it tested this guy, retested this guy, then retested this guy again, making this guy a weak point, because if you look at the reaction and this area, you'll find out that this is kind of like a resistance level. You see? And the reactions are weak. So for the reactions to be weak, it means it's likely going to break, because it's building up liquidity. So if that is happening, and then you can clearly see the price action here is not breaking, it's instead following up. What I do on this is, this pairs like this love Wyckoff. Like when you see pairs like this, I always just go straight to Wyckoff. Like the price action is too crazy to not even want to use Wyckoff, because Wyckoffs are designed for complex structures like this, and smart monies are designed for simple structures that have a reasonable market structure, to follow it. But structures that keep doing things like this, is always advisable to use Wyckoff. Let's go to the higher time frame to see what's happening to get the overall direction. On the weekly, yeah, very bearish. Anybody know why I say it's very bearish? Don't tell me you just looked at this and then you say it's bearish. That was what I did too, but my own confirmation is that price is within just tested premium, right? And this is forming kind of like a swing point pattern. Remember with the kind of patterns this pair makes, it's mostly manipulative. So there's every tendency we could see drop to this side because we have a breaker block here. So the first point of rejection could be from this area, which you have here. And then the second one could just go through to retest this area, which we have here. Retesting the break point of this just for it to come do this. Because generally you see we have this guy who's responsible for breaking this structure. And all this is just an internal structure. So the weekly is bearish. And then the daily, on the daily, there's no visible structure to see other than more bearish, because this guy paid to create a higher high, instead mitigated this point, which means we could see a lower low coming in anytime soon. So looks bearish. So if we zoom into 2 to 3 candles, if you remember when I said that during the lessons on the daily time frame, I'm going to be making reference to the lessons because I believe I've taught you guys everything I know. So, and I use what I've taught you. So if you have been paying attention in class, you should just be amazed how I'm mixing everything up and learning, basically. So just pay attention. And then if you look at this candle, if you look at 1, 2, 3, 4, 5, they're all bearish. Don't mind this looking bullish. It opened here, closed here, could not engulf this candle. The next opened here, went up a little bit, could not break this guy, then came back down, closed here. And the next bearish candles. So this is very bearish. You know, reading the candle patterns, you're saying it's showing a weak momentum. And adding to that, we had a breaker block at this point. This was supposed to be respected, but it broke. And then this is kind of like a retest. So we could expect something like this. Within the week, right? And then these are multiple swing lows, which could be used as liquidity. So let's move to the 4-hour time frame. So you see, it's bearish. Using SMC on the higher time frame, we say it's bearish. But we can't just buy from this area. We'll see multiple mitigations already. So mainly, like I said earlier, these kind of structures I use Wyckoff. I use Wyckoff to understand what's happening more. But if you say clearly, you would say this was, let me draw it out. So, okay, so I'm doing this. Let me use within this range, because this is kind of like the points where we saw the creation of the support and the resistance level. You see, price sold to this point, rejected. There's the resistance at this area. I use support and resistance to support my Wyckoff. Yeah. And then you have this point as the resistance level. Okay, so within this area, how was the dance? You would see clearly we had structure here, and then structure here, and then structure here, and here, right? So we had a break of structure here, but failed to create a lower low yet. Retested, instead of breaking the high, we had a retest here. So there's every tendency we could be having a lower time frame, lower low, because this price action is bearish. Did you see how I was able to simplify the price action, just identifying market structure? You see how we just broke down the entire movement by just looking at price action instead of trying to find another block. See, if you follow structure, everything becomes simple. Trust me, everything becomes plain and simple, and you get to see things before they even start playing out. Now, if you go to the lower time frame, let's say like the 45 minutes, you have this. You see? And let's use this. And you can easily see this is a reaccumulation. We had a selling climax, ARST, ST, test, sign of SOS, sign of strength, move to the downside, retest. This is kind of cause. This is what we call a cause. There's a term we use in supply and demand called cause and effect. A cause is when you start seeing them creating a reason to go bearish. Do you understand? A cause is a reason to make an effect. So that's why it's called cause and effect. Now, at this point, there's a cause here because we have multiple lows. Okay, so let me call this. Normally, I just call it cause, but not too complex things. I'll just name it liquidity. So this is liquidity. And then if you look at the structure from the higher picture, you see it's still bearish. So let me go to the 2-hour time frame so I can draw out the structure. Although we didn't much clear liquidity from here, normally I won't even trade this kind of market. I will just wait and watch. Do you understand? I'll just wait and watch because it's not even clear enough to trade. It's not even recommended to trade because it's in a range. But you can see, even if we decide to understand what is happening within the range, it's very easy. You understand? It's very easy if you use structure. But normally in market like this, I would even avoid it. Not because I can't, but because we have multiple pairs to trade from. Why must it be this one? You know, if you're finding it difficult to analyze, why not look for a different one? Do you understand? Sorry, my network connection had a little dangle. Can you guys hear me?
Yes, I can hear you.
Okay. So times like this, I just go to look for a different structure. But I want to show you guys how much you can understand the movement of price action. So this is a mitigation here. Okay. One has already happened, so I'm going to do it like this. So you see, simplified. And then I can take out this, and I have this. So I can call this area liquidity. I can also call this area liquidity because it's an internal high. And there are only two things that could happen right now. And that's either price going lower, going back up to clear this guy, so it could go lower. So this is like the easiest scenario to happen right now. But I'd rather not post this and just go to a different pair because, you know, why? And that's how I hardly lose because I don't act desperate. Instead, I try to look for a more reasonable market to trade instead of trying to make the market follow me. I only follow the market. Okay, here's another one that looks clean. If you look at the daily, this is liquidity. This is very clean, very clean. Because never buy a double high when you see something like this. It's like double top, retail double top. It's likely going to fail, you know, because everybody's looking to sell from here. Liquidity, you know, this is what is going to happen. I'm 100% sure. Because you have this one spending here. You have this one spending here. Except the market decides to make me look dumb. But I'm very, very sure I've seen things like that happen multiple times. And it doesn't play out nice. It's hardly you find that those kind of highs holding. They're mostly used for liquidity. Majority of the time, they're used as liquidity. So we're going to label this external high. Shit, everything was the other way. External high. Yep. So yeah, you see why? Because this is a low, this is a high, this is a low, and we're expecting a new high. So external high. And then if we have on this point, you can see we have this is a low, and if you can do, we have this. Oh, my dog is in a bad mood. We have this. We have this. And then we have this point of interest. Hasn't been mitigated yet. I'll call this liquidity because, you know, it's hanging on the air. Why is it hanging? That looks suspicious. Liquidity. Whatever looks suspicious is a reason for them to clear it out. If it's suspicious, it's not trustworthy. The market is not supposed to be suspicious. Well, we have less than 1 minute. You know, for those of you who joined late, this was just a quick study section for us to review the market together. So this will be my point of interest. And I would share these charts within the group, all of it. You can find it also on the free channel, and then we can do this some other time, okay? All right, thank you for joining us today, and I hope you learned something. All right, I hope you learned something just from watching. And then you can see that it's very easy to do. I spent less than 5 minutes working on one pair. And you can do this too by following the videos on the study section. Go and study and repeat the same thing, okay? You're welcome. You're welcome.